Howdy. Um, I'm gonna make Bitcoin and trading so easy for you because I spent years and years making it easy for me, and I just want to share that information for free. Um, Aside from getting your mind to understanding that Bitcoin set itself apart from everything else being traded, so everything that's being traded, it's just information, um, and everything's seesawing against each other in a way that you kind of want to figure out, okay, well, what do I want to get involved in? Um, I have so much money, I do want to invest, I don't know how, where do I get started? If you want to make money in trading, you have to understand the advantages other people have over you, the time they spent, the losses they endured, um, all the learning, the processes. It's a lot of information, but it can be made very simple because of Bitcoin now. So you want to find something that you're passionate about or very involved in if you're going the trading route, and allocating a big percentage at a good time frame into that particular asset. So technical trading does work very well for crypto. It works very, very, very well. The people involved in this, the people that are stacking bitcoins on top of bitcoins, selling well, buying it back, holding for the longer time frames, those people are the people you want to align yourself with and your plays on how you're going to go about this. So you don't want to be in your phone following the news. That's usually days late. There's something called buy the rumor, sell the news. Usually I know about things 3 or 4 days before they even hit the news in the Bitcoin realm. And you want to get on Twitter if you want to keep up with that stuff and follow the right people. But we have to understand where we're at in this thing, because everything is predetermined, everything's immutable with Bitcoin, everything's understood, everything is there to be seen, open to be seen for everybody, every transaction ever, back to the Genesis block in 2009. So everything is transparent. So this is total transparency, whereas we've been left with this total confusion on this previous system that we're dealing with the fiat world and everything it entails, with however you want to call it, government, brainwashing, whatever. The confusion is there. That I think everyone can agree on. There's confusion in the dollar world, in the fiat world. There's no confusion in Bitcoin, but there's a lot of deep thinking and optimism of what this thing could evolve into if it is to work in the long term. And I'm planning my life as if this is going to work until the end of my life, because there's nothing that says it won't, and it's past the point of being stopped by any individual or group of individuals, and there's no point to stop it. It's a great thing for us. It allows us to take self-custody of our own money, so we don't have to give our money to a financial advisor, we don't have to give our money to a Roth IRA. This can be your retirement, and you get to hold it if you'd like in your own head. You can do multi-sig custody, so you could share your private key with multiple people, or you could just write a private key and keep it, or you can keep it in your own brain and take it to the grave. Whatever you want to do, it's your money and your decisions, and there's nobody in place that's going to teach you the right way to play Bitcoin that's asking for something in return. I'm not asking for anything in return. I'm sharing information because it's just so important. I mean, this is a pivot point in history that needs to be looked at as honestly and as critically as you possibly can. So I'm just going to give a quick overview because I know people are going to not play Bitcoin and people are going to play whatever crap in the casino. So I consider Bitcoin your safe haven, your exit valve off of the merry-go-round casino that everyone is playing in. It's a sandbox essentially. It's where money just doesn't work as the common denominator. It works in a segregated kind of competitive kind of way. And the game theory of Bitcoin is when you exit a portion of your money into Bitcoin, you're basically just going to be leaving it there because it's not going to make sense to sell it. This thing's too powerful. The history of the 11 years it's been around, or 13 years, it's just too powerful. You're not really going to have points where it makes sense to do anything with it except hold it. You know, unless you are all in on it, then you will have to obviously take it out to buy what you want and whatnot. And everybody has different amounts of money. You know, some people have $100,000 and they say, well, I want to put $10,000 into cryptocurrency. What should I do? Where should I start? So every situation is different. You have people working paycheck to paycheck that say, I want to put a specific portion of my paycheck in. Everybody is different. Don't worry about everybody else. Just worry about yourself. Worry about how you're going to secure your wealth and get your situation and get your seatbelt on before you start worrying about what other people are doing. Because what other people are doing is only going to confuse you, and you're going to make mistakes if you're like, well, I like this person and he's doing that, and I like that person, she's doing that. Well, that's not an adult way of thinking. You have to filter the information and figure out your plan. And I'm going to make it so easy for people. If I see signs that people want this, I mean, it's so frustrating because I know when this thing starts moving up and it's $100,000 for Bitcoin, everybody's going to want to know, and that's going to route me back to how to trade like a boss and understand where you're at in the cycle. And just because you're excited about it doesn't mean you're in alignment with the money flow at that juncture. So everything at a specific moment in time, it's really important. So that's why when they talk about dollar cost averaging, you're just buying a dip, buying the next dip, buying the next dip, buying the next dip, because you trust the underlying asset that you're entering. And then you get an average buy-in with a total amount of Bitcoin. And then you decide how you're going to sell that on the way up. So when it's at 100,000, you have to understand there's many people that have been holding this since $200, $2,000, $10,000. Like, they're going to want to take profits. They're the ones with the vast majority of coins. They're going to want to sell into new buyers, and that's how tops get created. Is there's no buyers left, and people feel trapped in the asset, and then they have to sell it, and since there's no buyers, the price can cascade down very, very quickly. And that's why you see it over and over and over again. But the important thing is the buyers always come in when the price is good. Bitcoin is perfect price discovery. That's what makes it so cool. So just a quick little, maybe a mind-blowing thing, because when you try to learn how to trade, you have to understand trading's like poker, and everyone is in their static realm of, this is how I trade, this is how I make money trading. And I'm not saying everyone, but the majority of people aren't very dynamic in their plays or open to how other players are doing it. They're like, this works for me, this is how I do it. But at the end of the day, they're just buying low and selling high. It's not rocket science. And if you get your checkpoints and you understand where your money is and the security of it and how the network is there to protect you and your money, and you compare it to the other options, it's very, very cool to use Bitcoin as your play. And if you want to play in the casino with other coins or other assets, that's fine, but you really need to learn how to trade. You can't just buy, DraftKings or Twitter or Square, and all this stuff, ended up really wrecking a lot of people, and lots and lots of people lost money over the last couple of years, and that's fine because that's how we learn. Me included, I made tons of mistakes, but now I know going forward. So what I have here is, when we look at all the time frames, so if you watch traders or read about trading, how do you keep track of all these different time frames? Well, you want to put an emotional weight on the different time frames, or you want to put a percentage allocation on the different time frames. So obviously the larger time frames are going to be more important to keep your eye on, because you don't want to be moving your money in and out of assets. You want to be keeping it in the one that you really believe in. So what you want to look at first off when you're looking at an asset is the monthly time frame, and see, according to the moving averages, what's going on. So I'm going to bring Bitcoin over, maybe. Alright, so here's Bitcoin on the monthly time frame. And so I'm just going to make this chart nice and clear and nice and easy for you to see. So this is a site called TradingView, and it's free, and you can punch in any asset. You can see on the right, there's the S&P 500, there's the NASDAQ, Dow Jones, that's the VIX, your volatility, and then all these cryptos and stuff, all this stuff I keep an eye on, and I'm constantly looking up different stuff and just seeing the flow of money and what's going on. So if I go to Bitcoin on the monthly time frame, we can see over here on the left, those are all your options that my mouse is on right now. You can do measurement, zoom ins, drawing. So this is going to, I'm going to hide everything. So now we're just looking at Bitcoin and on the monthly time frame. And you don't, I know that I started here with a monthly time frame, but you do want to actually look at a longer time frame as well, especially if it's an older asset. So I'm going to go here just so you can get a better idea what's actually going on with Bitcoin. This is the 3-month candlesticks of Bitcoin. So what you can see is, we'll just go back to these, we'll just take this at $1,000. Went from $1,000 all the way up to 20,000. Everybody knows that move. That's the first everyone pretty much started to hear about Bitcoin. So boom, boom, boom. In 9 months, it went from $1,000 up to $20,000. And then the month closed. So each candlestick here is, or 3 months. So each candlestick is a 3-month time period. So it went up to 20,000, and then the candle closed at 14,000. So this is called the shadow or the wick, and that's the rejection. So if the wick is coming from the upside there, it's rejecting that price. It's too expensive. People aren't buying it, and people want to sell it. So it rejected from 20,000 and closed here at 14,000. The next 3 months, we got back up to 16,000, and then another wick, and it rejected all the way down, and we dealt with 1, 2, 3, 4, a full year until we finally bottomed out here at $3,000, and then another bull run in 2019, and then another year down, and this was the Corona dip, and this is where the action really started. You can see this candle right here on the Corona dip is what's known as a spinning top. So we have a wick rejection from the upside, and then we have a wick rejection from the downside, and the candle body is very thin and it's in the middle, so it's like a spinning top. So that means the market doesn't know which way it wants to go. So not knowing anything, only looking at the candlestick, you don't know that this market's going to go up. But in 2020, you know, Corona happened, you know, all this uncertainty, lots and lots of variables, with the unconfiscatability and the self-custody and then no censorship and the inflation with being the biggest catalyst. You know that on the spinning top, okay, well, it's likely to move to the upside. Over the downside, the whole point of Bitcoin is to protect you against these things, and that's what we saw over the next 9 months. Over the next 9 months, it went from 6,000 to 30,000, and then over the next 3 months, it went all the way up to 62,000. And then we had this month, which has been a heart attack for everybody. And this month here that happened in spring of 2021. This month, everybody that didn't just hold their Bitcoin or hold, got very, very, they lost a lot of money. Because what happened is you get a lot of buyers up here, new participants, and those same people unfortunately sold down here. And then it moved all the way back up again, just to move all the way back down again over the next 9 months, giving everyone, just pissing everyone off. Everyone new to the space got pissed off, and it's caused just tons of anxiety for new participants, and that's the way markets operate, and that's the bloodbath you're entering. It's not that you're not going to make a lot of money. It's that if you're not careful, and by careful I mean getting your checkpoints right and understanding that you need to make a plan on what you're going to be doing. There's lots of metrics to look at and defend why Bitcoin is where it's at and why it's going to where it's going. I'm not going to get into all those right now, but these are your 3-month candles. So Bitcoin hasn't been around that long. It's been 13 years, but you have to understand it's traded 24 hours a day, 7 days a week. Nothing's ever happened to it. It's secure. It's perfectly operational. Nothing has changed since it was $1. It's the exact same thing. It's just a scarce circulating supply of 21 million being distributed to the 8 billion of us over the course of time. And it's informational, so that's what I'm doing. I'm sharing the information, and it becomes information in your head, and then you take self-custody of your own money for the first time in history, which is clearly very important because they are seizing people's bank accounts that are standing up for freedom in Canada right now, and you're just going to see more and more of this grasping to control from the stage actors, and it's just a drama. It's just stage actors. They're not anything. They don't matter. Bitcoin matters because it's freedom money. It gets you out of that rat race. It gets you out of that nonsense. It lets you preserve your wealth and your money. They're stealing. Inflation is theft. It's taxation. And they're just upping taxes. They're upping the fear and the paranoia. They're upping the drugs and the opiates. Like it's very, very non-adult right now. A good way to become an adult is to start thinking about Bitcoin. This is adult money. This is grown-up money. This is the future. This is where everything's headed. And this is the protection against all of that. So it's an amazing point in history because we never had anything like this, and that's why people that get involved can't stop thinking about it, because the effects it's going to have, the network effect it's going to have on the minds and the money system. So real quick, 3-month chart. So okay, we got a good overview. This thing only goes up, but what is going on lately? Well, a lot of volatility is going on lately, but that's no different than always. We got big money in it now. We got reasons for manipulation. We got reasons for FUD. We got reasons out the yin yang. All these new coins came out. All of them are worthless. None of them are worth anything. All of them are a distraction from you buying Bitcoin, because over the course of time, Bitcoin goes up in price, which means if you can be distracted and people can run their scams and you can fall for their scams and you can make the makers of those coins richer, you're losing when you could have exited into Bitcoin at an earlier point in time, and you could be winning, because Bitcoin as the denominator against all of these assets is destroying them. It's destroying everybody. Even people that trade profitably are getting destroyed by Bitcoin because they could have made more money just buying and holding Bitcoin. And what more gift from the universe do you want than to just buy and hold Bitcoin and then live freely with the security of what it is? So this is 3-month chart. Let's go to the month chart. So every candle here is now a month. Okay? So you'll see people using indicators, you'll see people drawing, and what do we have here on the monthly chart? Just basic, simple, okay, higher high, lower high, lower high, lower high, lower high, lower highs, all the way down here, higher high, higher high, higher high, higher high, higher low, higher high. That's when you shoot up. You build this long consolidation period right here, right? And then from that point, you shoot up. And then this was the manipulation people aren't really grasping, was this thing should have had a pullback around the $30,000, retapped like 20, and then moved up to 60. But it just kept going because everyone thought the pullback was going to come. People bet hard, they short it, and then you get the short squeeze and you get the liquidations and the FOMO to the upside, and you get all those new market participants buying those high levels. And then we had that. See, there's such a lack of patience on people's time preference, because we live in this consumer-driven economy where everything has to be now, now, now. You have to be stimulated now. Like, you have to make money now. Well, that's not how markets function. You can't do that. You have to understand artificial intelligence, trading bots. You're not going to beat this idea of trading. I mean, it's a casino. It's gambling, and over the course of time, because you don't have an understanding of what's going on, you're going to lose your money. Plain and simple. Better players are going to take it from you. And the anxiety involved with any form of greed is just not worth it, especially when you're given a gift like Bitcoin to allow in. I think Bitcoin is the most conservative play you can do. Everything else, to me, appears to be a very, very scary gamble. All of these assets they're inflated. It's all speculative money. Bitcoin is the thing that's constantly getting attacked and hated, and it's not speculatively higher than it should be right now. It's actually very, very suppressed, and Litecoin is absurdly suppressed. So I moved a portion of my Bitcoin into Litecoin for that reason. So yes, I entered some of my Bitcoin into the casino, but Litecoin is a duplicate of Bitcoin, except now we know with Litecoin, the original owner, Charlie Lee, exited the project. So he has nothing no investment in Litecoin. He's just letting it run, and he's also doing everything he can to keep it doing well, which is just nice of him on his part, because he's not even part of Litecoin anymore. Satoshi is part of Bitcoin. If he is alive with the private keys, he is part of Bitcoin, and we don't know what he's going to do, and it really doesn't matter because Bitcoin grew to the point where Satoshi having 1 million of the coins is irrelevant. And Litecoin is going to be cheaper for payments. It's actually going to want to be used by, countries and people, because it's the transactions are cheaper and faster, and it's pretty much equally secure. So I see it as a store of value and a medium of exchange, and they're adding privacy features, and it's been overlooked because the majority of people that would have bought Litecoin bought into these other scams. So it's just taking longer, which means it's going to have a bigger up move, and that's going to make some really cool gains for Litecoin. So I see Bitcoin going 4x, 400% up, and I see Litecoin going 20 to 40x up. So, and I feel more than almost as comfortable in Litecoin as I do in Bitcoin. So I'm definitely willing to take that gamble to get more Bitcoin. So after Litecoin makes its move, I can convert that into some Bitcoin and into a house or whatever. So if we look at these monthly candles, we'll see that we had this huge fake out candle in October where it on the monthly bullishly engulfed, so it overtook the previous candle by a ton, and then it didn't even have that big of a wick or shadow rejection from the top, and then there was another big fake out there, and then it just this big sell-off to where I think people just got pissed and shook out, and the frustration set in. And the sad part is Wall Street's buying your frustration, and you're going to have to re-enter this market at some point because you already had the seed inserted in your mind. So you don't want to overinvest what your tolerance can handle. Bitcoin has gone down 80% in history. I don't think it's going to do that anymore because we have diamond hands entering. We have Wall Street. These people are entering with 10, 15 year. I mean, they're not planning to sell. And this thing is like a virus for the fiat world. Like it's a black hole. It's sucking in. It's going to be sucking in energy from everywhere. And this is the only fair thing out there. And it works better. And it removes so much to where transactions are going to be essentially free. There's just not going to be this resistance with money. It's just going to be, okay, this is now what money is, and it's just so much better. And there's going to be so many things on top of it, like lightning and everything. Anyway, so those are your monthly candles. So if we flip on some indicator here, so this is very simple, moving average, right? Oops. Alright, so we'll just get rid of everything except the moving average. Alright, so there it is. There's your monthly history. And then these are just different moving averages, and you want them to be far apart like they are right now on the monthly. So you can see right now Bitcoin came down, tested some of the moving averages on the monthly candles, and it got a rejection up. So it said, no, this price is too low. we're going to go up to here. It said, no, this price is too low. We're going to go up to here. And now it's kind of back into price discovery mode on this new month. So this new month is only halfway through. It could and does, and I'll show you why I think it will, bullishly engulf this previous month. So February, this month right here, I think will bullishly engulf this previous month, and we'll have a beautiful looking structure going forward. I think it could even, the wick on it could even get as high as 55,000. And I'm going to show you why I think that in a little bit. But we can see, if we look at the history, okay, what happened on these monthly candles in history. When you get really far away, you know, up toward this $20,000 top, you know, reality has to set in, and big speculative moves up equal big speculative moves down. And then you can see that it had a big move up, and then it came down and totally rejected all of these monthly moving averages for the Corona dip, got the bullish engulfing, a couple months of consolidation, and then it was off to the races. And you saw FAR pulled away from moving averages, did not test the moving averages, if you notice on this first dip to 30,000, because it got so far up previously. And then we got another big buy up, and now we're actually testing these moving averages, and it's looking great on this monthly time frame. So do you want to allocate all of your money into say you do want to convert total, like, all of your money into Bitcoin? Well, does it make sense to do that here? Well, no, not really, because you can see in its history it's come down to the bottom of these monthly moving averages. So if it were to come down to like 22,000, 20,000, there you go. That's the point where you'd want to put in a massive amount. But we're in this weird situation where it doesn't look like that's going to happen. It looks like we're actually going to be moving up again for one more, you know, move up on these larger time frames, and then we'll have a bear market after that. That's pretty much the consensus and understanding, and that's why people are holding so much. So we're halfway through this month. To get any more information, we're going to have to go to a lower time frame. So we'll go to the weekly time frame, and we get a different story here on the weekly time frame with moving averages. We can see that on this first dip from 60,000 to 30,000 last summer, it came through and kind of rejected. Then we got above, and then it said we're moving off those again. And then this last sell-off here, which was a slow, about 2-month sell-off, so each candle is a week. So we're at November, so we peaked here in November, and then mid-November's when we bullishly engulfed on the weekly to the downside. So what we can look at is I got a drawing here where I'm connecting the tops. And this drawing carries over to the other time frames. That's why it doesn't look perfect. It's probably the daily where it'll look better. So I got it from the tops of the candles connecting, and then the bottoms, and it's a descending wedge. So we were stuck in this wedge 1 week, came from the top of the wedge 1 week, couldn't even get to the top of the wedge again. Then we came down to the bottom of the wedge, or we tested the top of the wedge, then we came down, then we had some weeks sideways, which is what markets do. They do the most annoying thing possible, and they piss people off when they go sideways and they're off their all-time highs. And we got another batch of pissed off sellers, so we went off the top of the wedge again, to the bottom of the wedge, top of the wedge, and then we went through on a fake out. And I think what caused a lot of it is you got new traders in the space, and they were looking at this a lot of people were looking at this right here. Oops. Okay, so what we got is we got a shoulder. It's just going. All right, so there's a shoulder there. There's the head there, and then another shoulder here, and then you would have the breakdown line here. So what happened was this head and shoulders is huge, and the FUD, the uncertainty, said that if this broke down, you would take a measured move from there to the breakdown point, from there to the breakdown point, and then you'd take that from there to here, and you're looking at like $25,000. And that would make sense in a normal world, that could play out, but it really didn't make sense with all the positive facts of Bitcoin, not the mistakes new participants made, but the planners that the diamond hand planners that are the people you actually want to keep your eye on, not the pissed off new participants in the space. So what I'm saying is, when that head and shoulders broke, you can see, boom, it went all the way from 47,000 down to 40,000 in a single week, and then it did another move, and it actually broke out of this descending wedge, and it looked like the head and shoulders was going to play out because the descending wedge broke down. But what happened was, it actually made a higher high from this summer, or a higher low. So we're really building an amazing structure here that has potential to absolutely rip up now, because this is a year of sideways consolidation between 60,000, 30,000, and I mean, you have the most diamond hands entering, the biggest of money entering. People are looking for an exit that have a lot of wealth. Countries are looking for something that has great utility over the crap that they're being offered from the IMF. So all the positive stuff made me absolutely shake my head at that whole head and shoulders crap, and it looks like we got this weekly engulfing. We're back into the moving averages on the weekly chart. Nothing is wrong. Nothing is bad right now. It'd be tough to even come up with FUD right now. You know, the stock markets could dump and Bitcoin could go with it, or it could decouple and not go with it. And I think that's what's more likely. I think the shakeout in the stock market was opportunity, and you can see it by which assets got wrecked and which ones didn't. It's like everything got wrecked. Everything. You know, unless you're in, you know, the real good stuff from early, like Tesla, or, you know, some of the bigger cap stuff, but like Coinbase wrecked, like, and this is all because people need to get their entry positions and to shake people out and make them not confident in the asset. And that's when the buyers come in. It's a game. It's all like pyramid schemes. Look at DraftKings. So everybody's like, oh, sports betting, DraftKings, blah. It's look at this. I mean, okay, Let's just go to March of 2020. It was $11. It went all the way up to $70, and now we're back down at 20 bucks. So everybody that bought during this time period, the majority of people that entered DraftKings are down money. Just one example. Every chart looks this way. So what I'm saying is, people are moving their money out of legacy stocks to move it into Bitcoin. I believe that's why a lot of it's dropping. Could you imagine being a millionaire and not owning any Bitcoin? There's only 21 million, and there's so many more millionaires than that. So every millionaire is not going to be able to get a full Bitcoin. I mean, that should resonate. If you're a millionaire, why don't you have at least one? That's 5%. $40,000 is less than 5% of your $1 million. Like, it's almost irresponsible. I mean, you got to use your head. Like, I can't lecture people. I don't want you trusting me. I want you trusting your own head and the information. I can't hash everything for you. So let's go back to Bitcoin on the weekly. So the head and shoulders, that didn't play out. This rebound has been too big. I mean, theoretically, I guess it could. It just wouldn't make sense. So realistically, what we did was the pattern for this falling wedge here is the top of the wedge, which is $65,000. So we broke out of the wedge. It got retested on the lower time frames, and it looks like it's ready to make its move to the top of the wedge at 60,000 retested. So we got higher lows and higher highs. So we got a higher high here at 64,000, then we got to 69,000, higher low at 30,000, and now higher low at 32,000. So there's your weekly candles. We're right in the middle of the moving averages. Let's just go to the daily 3-day candles. We're breaking into those as well. Everything's looking great, and there's so many other indicators I can show you, but these moving averages are the biggest one, because when we do our allocations, you want to be buying the majority of your asset on the higher time frames at the bottoms. Well, you missed the bottom. The bottom was Corona of 2020. You have to understand, you missed the bottom. You're not going to get this particular bottom, but you can get the next bottom. But you also don't want to have no money in Bitcoin, because that might be scary to not be involved on this run up. So maybe you want to keep cash reserves for the next bear market, and plan how much money you're going to make and all that kind of stuff, and whatever you're comfortable putting into Bitcoin. Because here's the thing, it's not that you're scared of Bitcoin going down, it's that if your money's in Bitcoin, that means you can't touch it. You have to leave it there, because you don't know when it's going to pump, you don't know when it's going to dump, and that's why you're leaving it there. And if you take it out, that just means that you're not involved in the asset. So it's going in there for your future self or your future generations. So now we'll go to this. These are the 3-day candles, and yeah, I mean, you can see this is called a bullish pin bar, where a huge rejection to the downside on those 3 days, followed by more upside, followed by a huge bullish engulfing, followed by more, and now we're at consolidation, and it looks like we're ready to break up. And what we can look at here is an inverse head and shoulders. So head and shoulders is the thing everyone knows. It's a head, 2 shoulders, and then breakdown point. This is the opposite. You can use them to the upside as well. Like if I were to just invert the chart, This would look like a head and shoulders, but understand an inverse head and shoulders moves to the upside. So where this price is right now, that would be the neckline of this inverse head and shoulders. So can you see the head and shoulders? The neckline's right here at $44,000. So if you can see the head and shoulders, I can draw it for you. Alright, so right here, that's a shoulder, right here's your head, and here's your other shoulder. And the way that you measure this is you take it from the top of the head to the neckline at $44,000, and then you just extract it from there. And you're looking at a move up to $52,000. So that's what the 3-day time frame looks like. But you can see when we go to the 1 day, it's the same exact thing. It's the same exact structure. This is a very sound structure, but you don't actually want to do your trade until it's breaking this $44,000 point again, and then you can put a stop loss in, you know, at like 43.5 or whatever. But I don't recommend doing that stuff because your stop loss is visible and the exchange will just go get it. Don't trade, okay? It's just useful to know when you're in the asset what's going on, in case you do need to make plays. Like, I see something like this on the larger time frames, and then I see something like this in the smaller time frames. And here's something really interesting. So I'll just jet down to the 1 hour here, where we can zoom out and we can see here's the inverse head and shoulders, these things again. But the interesting thing is over here, if we zoom in, we have another inverse head and shoulders. So this would be the head, shoulder, shoulder. So you go shoulder, so you got shoulder, you got shoulder here, head, shoulder, and then your neckline would be around the price where we're at right now. So we have an inverse head and shoulders inside an inverse head and shoulders, and then when we look at other indicators that I'm not going to get into right now, everything's looking great for the upside. But you also have to understand, when everything looks so obvious, it usually does the opposite. So that's why you don't even want to get involved in trading. You want to not at all trade. I do not recommend you trading. I do not recommend me trading. I don't recommend anybody trading, because you're trading your time for essentially gambling. Even if you're very, very good at it, you still just don't know. People are irrational. Markets are irrational. You could break down all the data points and all the details and really be confident in what you're doing, but why, when you have something like Bitcoin where you can just put your money safely and know that this thing over time will go up and up and up, and if you don't get greedy, you'll end up making more money than everyone else anyway. So why even donate your time to trading? I don't recommend it. What I do recommend is getting your entry points now, before Bitcoin's $80,000 or $100,000, before Litecoin's $500 or $1,000. Like, you have to understand, it's so much more painful to enter at the higher price points. Just enter comfortable amounts as the dips happen and you learn more about the thing. And start comparing whatever asset, shiny object you're looking at, compare it to Bitcoin, honestly, over and over again, until you stop looking at that shiny object asset, because just because you have a connection with it doesn't mean it's going to go up. It means the thing is in the news because they need buyers. It's in your phone because they need buyers. They need people to buy their bags. So that's what all the advertising is, and that's how it's always operated. So what happens on CNBC is they get their positions, and then there's a move up, and then they bring it in for the last pack, the last FOMO players. That's what crypto is setting up for. Okay, so if you get your entry now, no, it's not the best entry. It's not $5,000 Bitcoin. It's not $10,000 Bitcoin. It's not even $20,000 Bitcoin, but it's 40,000 when it's looking like it's going to go to like 250. You know, we don't know what this next push is going to be, but people are going to get pissed and things are going to get wild. So, and then we can look, you know, just at a 15-minute chart, for instance. So we can see that what's been happening here on the 15-minute chart. It's coming in to test the moving averages right now, where it broke through pretty violently, but this is a pretty big pullback, and this isn't forming like a bull flag or anything, so it's concerning on the 15-minute that it's not ready to break this inverse head and shoulders yet. It might need more time. But yeah, I wouldn't leverage trade, I wouldn't margin trade, I wouldn't do anything except buy spot Bitcoin, put it in your own custodial hard wallet so no one can get your coins, and you don't have to be part of the charade. Like, there's nothing more freeing than doing that, but you have to do the act of doing it, or you're not even going to know what I'm talking about. Get your money safe in your hands, because everyone's out to get your money. Like, these people are savages. Like, don't let them savage your money. Like, don't let them prey on your emotions. And it's all of them. It's all of them. It's all the news sources. It's all of them. They're just needy, attention-seeking losers. Like, start just getting your money into your own hands, because that's going to be the new narrative, because that's the honest narrative, and Bitcoin's awesome. And you can trust it. Nobody can screw it up. Alright. That's that video. Look, I could break down more and more and more and more, but I would love for people to experience just the buying and holding, dollar cost averaging, slowly converting your money into it, and just learn. Like, if your mind doesn't grow with it and you get over more money in than your mind can handle, you're just gonna lose. You're just gonna sell it. You're gonna panic. Don't go down that road. I know you have to go through all that stuff to actually get the confidence, but try to play it as smart as you can for now.